course, we start the day with the shilling once again on the front foot. The NIC 20 sitting at 3,540 points. There has been a rally for the past 2 weeks. What are you making of all that's taking place on your front?
Well, I'm glad the foreign investors are trooping back to our market, and I think this has largely to do with the European debt crisis. At least we saw that abate, and I hope that the news of Greece calling for a referendum is not going to actually bring in some more uncertainty on that front. And I believe that as long as we continue seeing this sort of bullish run, then we would expect local investors will soon take note, and that will push us to even better times. And I think at the end of the day, on the fundamental side, we are still seeing companies announcing double-digit growth, which means that the underlying factors are still very strong. And I know that investors who are watching to see third quarter results and what they would be like in order to inform their decisions going forward.
Now, we had KQ, as you say, companies coming out with really strong results. KQ, one of the companies, just reported this morning, pretty much in line with expectations, but by all accounts and purposes, a really strong set of numbers there. Earnings per share up over 40% to 4.4 shillings. I don't know if you've had a chance to dig through the numbers yet this morning, but anything that stands out for you?
Well, what you see about Kenya Airways is that they have actually taken a lot of care to address the problems that they feel would actually stunt growth in the long run, and that especially is in terms of, for example, their pilot numbers have started growing. They had issues with the pilots, they had issues with staff. We haven't seen them have any more issues in the last half year, which is a good thing, and I believe that those issues were really stopping the company from concentrating on actually creating growth and moving on. I also think that they are in their element, especially now that we have had the shilling weekend during the last period, and I think you remember the last time that Kenya Airways made a loss, it was because oil prices had dipped very low, and they actually changed their hedging strategy into a shorter term strategy, and this has really helped because they usually do quite well when oil prices go well, and they have done so. But I believe that even if oil prices go down, the shorter term hedging strategies will also come to their advantage, which I believe is also a good thing. So generally, Kenya Airways is actually set for growth, and it's a very good result, especially now that they're intending to come to the market with a major cash call.
Of course, you've issued a research note, NIC, that is saying that you see the share coming in at a 22% discount for that upcoming rights issue. How will these financial results, as well as a slightly stronger shilling, of course it's around 10% stronger than its all-time low, affect this upcoming rights issue?
Well, I personally think that the fact that almost half of the rights issue is already sold, because the Kenya government and KLM are definitely not going to be willing to give up their share of the company, and they wouldn't be looking to dilute. And also the fact that Kenya Airways also has a strong shareholder, the shareholders tend not to be on the individual retail, but we have quite a few institutional and larger shareholders, which means that it won't be as difficult to actually sell this rights issue. And I believe that having come out with strong results, especially in a period where we have had adverse effects on our economy, then it would be a very strong positive sentiment getter for Kenya Airways.
Let's move on to the banking sector. Barclays Kenya, latest bank to report results. A profit before tax up 26% to 8.8 billion shillings. Provisions down some 56%. Operating expenses down 12%. So it's really on the cost side and the prudent lending side that they've managed to rise earnings by such a percentage. But it's not as strong as what we're seeing from KCB and Equity. Were you at all disappointed by these numbers?
Well, I think I expected it. Barclays has perennially chased growth. You find that the local larger tier one banks tend to be the ones that go out there and bank the unbanked and do all these things. And Barclays will tend to come in a bit late, and the tendency is that I don't think that they have yet regained totally the sort of trust that they need to actually see growth, especially in the SME and the small and the lower end of the market. However, they still have a very good quality of their loan book. They're still the biggest lender in terms of assets, and I believe that Barclays, in as much as they have continued to rely more on restructuring for growth rather than creating growth in the market, I believe going forward they are definitely going to see where they can actually shift their operations and sort of create that growth.
And perhaps this prudent stance will really stand them in good stead as we've got interest rates rising and the threat of bad loans rising.
Yeah, come again? Sorry.
In terms of the interest rate environment, we've had interest rates rise by 10.5% for 2011. So in terms of their stance towards more conservative approach to lending, this will perhaps stand them in good stead.
Yes, Barclays have always been conservative, and that conservative approach does actually work positively for them in harder times, but it works negatively for them in a high growth situation, which is why you find that whenever we have a slowdown in economic growth, then Barclays and Standard Chartered for that matter, their growth levels accelerate, while in the inverse you find that it is Kenya Commercial Bank, Cooperative Bank and Equity Bank which tend to show the strong growth figures. Yeah. But now we are seeing people like Equity begin to look into the area where Barclays and Standard Chartered specialize, and I think they're going to give them a run for their money.
Yeah, just very quickly, we've had MF Global, the latest European financial institution fall victim to the Eurozone crisis. As we've got all these international financial institutions becoming more and more complex, becoming more risky investments, do you see foreign investors turning to sub-Saharan banks, East African banks, and finding them more an attractive investment opportunity?
Well, yes, in terms of growth, because for example, Barclays Bank is limited to their growth within Kenya, whereas if you look at Equity, Kenya Commercial Bank, they are spreading their geographical footprint and actually tapping into regional markets, and they're looking very strong on that front, which is actually creating that that feeling that the growth opportunities that are coming to the investor, the shareholder, are actually stronger on that front, and I think that will inform a lot of the way investors move in the future.